Good morning, everybody. Welcome back to cilinixfxcapital. I hope you're all doing great, and welcome to this new video right here on Bitcoin. After yesterday was a little bit of a bloodbath, not entirely unexpected. I mean, if you watch my videos, I think yesterday morning and yesterday in the middle of the day, the afternoon update, I think there's a bug walking on my screen right now, which is great. But I think you would have been prepared, right? I mean, yesterday what I said in the first update in the morning is all right. Well, it looks like we're breaking the 7-day and the 30-day rolling VWAP. If we drop down below that, we're most likely going to drop down in this tight range right here. That's the yellow area. And I know the chart looks very messy, but trust me, it makes sense, all right? It makes sense like this for me at least. And then yesterday in the middle of the day market update, what I said is that, there's a lot of liquidity right here between 105 and ultimately 103.5. You have several POCs in there, so point of control, so that's a lot of liquidity. But you can also just see it here on the chart, right? I mean, if you zoom out and you check the visible range volume profile, you'll see that that's where most of the liquidity is. And there were quite a lot of short positions being opened, for example, so that would be a logical area where they would take profits. Now, I have to say, yesterday the fundamentals did become a little bit more uncertain, and that is still the case right now, right? I mean, there's it's very hard right now when we're talking about the price of Bitcoin, which I ultimately expect to remain stable, by the way. When we're talking about what I expect over the course of today, we have FOMC coming up, of course, also in the afternoon. Or in the evening, depending on your time zone, which I will be live streaming, by the way. So hopefully I'll see you there. It's always a lot of fun. But so that's coming up, right? So usually the day of the FOMC, it's relatively quiet. And at this point of time, even with all the bearish fundamentals, like we did form a nice bottom right here, right? We also had quite a lot of volume coming in there. Volume was actually exceptionally high during that spike, and we actually got very, very high volume with the bounce again. So that's great. But look, I mean, ultimately, the big question is, is it priced in that the US joins the war between Iran and Israel? To get specific here, I don't know, right? If I would have to judge based on only the technicals, I would say this is a bottom and that we can hold it. But honestly, just going off of my feelings only, which, at times like this, actually matters as well, because I've been through a lot of these situations over the last year, trust me. And most often I do have a bit of a good reading. And I would say, if we actually see an escalation, I think we can still have a spike down lower, right? Ultimately on the higher time frames, I think this wider range support between 102 and 100,000 will hold, right? So I don't think that's in danger. But dropping down into that is a possibility. Dropping down into that and losing this tighter range right here in the middle is a possibility. Although I would say under the current fundamentals, right? So if we're analyzing under the assumption right here that the fundamentals as they are right now will stay the same, I would have to say it's most likely we will remain stable, right? So that this was a local bottom right here, that we're not going to touch that again. Or that we might spike down to that to test the conviction right there of both the buyers and the sellers. But that after that we will rapidly bounce back up and that we will remain stable. And honestly, I mean, I have a little bit of a bullish bias towards the FOMC. I mean, that remains to be seen. Ultimately, it all depends on what's being said in the press conference. But if we go off of the economic data in the last month or so, we should have been able to get some sort of an effect, or we should have been able to see some sort of the effect of the tariffs being implemented. And the data suggests that the effect of that has been limited, right? So therefore, the uncertainty is slowly decreasing, and that opens up the way, hopefully, for rate cuts. And I hope and I expect the tone to be that way, and that tone would be bullish for the markets. But for now, I'd expect stability. And if we get a bullish FOMC, but I'll still keep you updated on that throughout the day, and we can break above 106,200 right here, which is the main resistance level, then great, right? And we can rally easily into 108 and 110, assuming that the fundamentals stay relatively stable in the rest of the world, which I'm not sure if that's a fair assumption to make, but still. So those are my thoughts for this morning. If you do have any questions, let me know down in the comments. But for now, thank you for watching. Take care and bye.